Hello and welcome again. This is Robert Schein, Managing Director and Partner at Blanke Schein Wealth Management. Today is our Friday Insights edition. It's the 29th of October. Last Friday of October. We're going really close to year end. And let's talk about the strategy right now that we have before us for all of our clients. A lot of client questions right now as it relates to Biden's tax plan and sort of the changes that are upon us. Obviously, earlier this week, before President Biden got on the plane and went over to Europe for the G20 summit in Rome, he basically said he had a deal in principle as it relates to sort of the spending and social programs on a go-forward basis. That being said, he said it's completely offset by way of taxes, but you and I don't have to worry about it because he's not coming for you and I. He's only coming for the billionaires and ultimately multimillionaires. But we all know that that's not always the case as it relates to their intent all the way to reality. So in addition to being prepared, and what we do for our clients at Blanke Schein Wealth Management between now and year end in the fourth quarter, traditionally every single year, we go through our clients' accounts and we offset losses and gains to square up portfolios. And as we're doing our reviews with our clients, we're also asking, do you have any outside losses or outside gains outside of Blanke Schein Wealth Management that we need to know about, essentially, so we can help you with your overall tax strategy and mitigation strategy. Now, that's what we do on an ongoing basis. And again, like I said, if you sold property and you have a capital gain, not that we have many losses here in our portfolios for our clients, but that being said, we'll do the best we can to sort of offset your overall tax exposure for 2021. Now, for 2022, what can we do? Or let's just look at the board here as what I said. Now, these are possible tax strategies. And ultimately, the disclaimer is you check with your tax consultant first, your CPA, because obviously I'm not a CPA and we don't give tax advice, but we do look at strategies that we could consider and submit for consideration for you at home to go meet with your tax expert to see if it's right for you. But we also help with that conversation. And the things that we're showing clients as possible scenarios that we can get ahead of, loop us in with your CPA and we can see your whole financial picture together and make the best decisions for you. One of the things to consider right now is accelerating income and capital gains for this year. Now, I know we're going to have less than 2 months left, and the question is, we don't know when the bill will actually be passed. And obviously, Washington tradition and Congress tradition, you got to pass the bill to know what's in the bill, therefore then we can all scramble. That being said, what could be a possibility here is accelerating some cap gains for this year, depending upon, because essentially capital gains could be higher for next year. So if you're going to take a gain this year, potentially on that position in your portfolio, or if it's real estate, so on and so forth, this year could be the year to do it. Again, these are all possible probabilities that we were considering. Number 2 is defer deductions and delay capital losses to 2022. So don't book the loss this year, especially small business owners. There are fourth quarter things that you can do and consider as it relates to sort of booking the loss or booking or delaying a deduction for, let's say, January 1st. Those little sort of book entry things make a big difference as it relates to taxes. So keep that in mind as well. Increased charitable gifting for 2022. So the Schein family, I set up a foundation, the Society of the Few. I also have a donor advised fund. So it's, again, in the name of the Society of the Few Financially Empowered Women. And in our family donor advised fund, we're the owners, and we can gift stock into it. Highly appreciated stock asset, and that's how I seeded my donor advised fund. And the fund has its own mission that's important to us, which is education for women every step of their lives. So any age, it's all about the mission is educating and empower women to take take control of their financial lives. Easy for me to say, yes. I know it's a Friday. So, but that being said, we own and we've created and we get the tax deduction for this donor advised fund personally. Again, you can donate highly appreciated assets into that, and then we sell those assets, and then those assets then can, as over time, be distributed to the charity of choice. And what's the benefit to, let's say, when we did it originally, Jenica and I, we got the immediate tax benefit for that donation. And then we still have control on the other side as it relates to those assets being doled out to charities or for the interest of the charity from the donor advised fund. if you want to know more about that, we have that through Fidelity. They're the best, actually the number one custodian, and they have the largest donor advised fund sort of custodial support out there. So they're experts, and I have a designation that I can help you with that and walk you through that if that's right for you. Again, it's nothing to set up. Those are easy to do. They're as little as $5,000 for the donor advised fund. So don't think it's a big thing. It's one of those things where every little bit helps, but it also helps on not only the impact you want to make for those nonprofits that you care so much about, but at the same time, you could also control that and see how that's played out over time to those sort of nonprofits that you like. But we know that if taxes are going to go up, we're going to see a rush to charitable gifting strategies, and there's going to be more to come and report on that. Other two items, convert to a Roth from your IRA or your 401k. That's sort of a sticky strategy right now, simply because that exclusion is going to be sort of taken away, at least as it relates to this bill. But there could be too little too late for sort of converting sort of last minute. It's called the backdoor Roth strategy. If you wanted to learn more about it, we can, but I don't know if that's going to be the best strategy. It is something to consider. And also create sort of use your lifetime exemption. So one of the conversations is in irrevocable trust. So it's an estate planning conversation. We can reach out to your estate planning attorney, loop them in and have this conversation. But if the per person $11 million exemption goes down to, let's say, half that, $6 million per person, a lot of businesses and assets and real estate and all that is sort of being put in trust outside the estate to take care of that today's exemption. And then tomorrow, if it changes and they lower it, well, at least you have so that that percentage is out of your estate itself. So these are bigger picture things. Again, a lot to think about, but ultimately let you know that we at Blanke, Schein Wealth Management are in the forefront of always making certain that you keep what you hard-earned dollars and what we're all making out there for you as well here on our side. So we're just forward thinking here as always, and we're just a phone call away to see if we can help you on an individual basis. Thanks again for watching, and tune in next time. We'll see you. Take care.